Welcome to the deep dive. Today, we're taking a closer look at the financial markets, specifically through BSE Limited's Q1 FY26 results.
Right. BSE, one of India's oldest exchanges.
Exactly. And they've just put out some numbers that are, well, definitely making waves. So our mission today is really to cut through the noise.
Get past the official reports, the presentations.
Yeah, and the earnings call stuff. We want to pull out what really matters, what these numbers actually mean for BSE, for the wider Indian economy, and of course, for you listening in.
And it's a big one. They're calling it their best quarterly financial performance ever. I mean, top-line revenue crossed 1,045 crores. First time ever.
Oh, wow. Okay. That's a pretty bold claim, as ever. So let's get into those headline numbers then. How does this quarter actually stack up against last year? What are the key figures showing this record performance?
Okay, so on a consolidated basis, operational revenue jumped 59% year on year. Hit 958 crores.
59%.
Okay. And net profit, even more striking. Attributable to shareholders, that went up 104% year on year. So doubled, came in at 539 crores.
Doubled. That's huge.
Yeah. And operating EBITDA, which is, a key measure of how the core business is doing profit-wise, that rose significantly too. 626 crores compared to 282 crores same time last year.
Right.
Which pushed their operating EBITDA margin way up to 65% from 47% last year.
65% margin. That's pretty healthy.
Very healthy. And earnings per share, adjusted for the bonus shares they issued, was 13.09 for total operations. So yeah, strong growth pretty much everywhere you look.
And the market noticed, I assume. Share price reacted positively.
But absolutely, the market reaction was quite positive. You could see it in the share price movement right after the results came out.
So what did management say? What's their take on why things went so well this quarter? Any standout comment from the MD and CEO, perhaps?
Yeah, the MD and CEO basically put it down to, and I'm quoting loosely here, a clear strategy, commitment to offering stakeholders choice and opportunity, and a resolute focus on unique service offerings.
Okay, so a deliberate strategy, not just riding a market wave.
That's the message, yeah. It speaks to a very conscious effort in how they're positioning themselves and what they're offering.
Right. That sets us up perfectly then. Let's dive deeper into the revenue. Where did this surge actually come from? What were the engines firing on all cylinders for BSE this quarter?
Okay, well, the biggest piece by far was transaction charges. They surged, get this, 84% year on year.
84%.
Yeah, 737 crores just from that. And that includes income from, equity cash trading, equity derivatives, mutual funds, the clearinghouse operations, the works.
So that's the core business really accelerating.
Exactly. Then you've got other operating income. That was up 57% to 70 crores.
Okay.
That covers things like enhanced data fees, index services, software charges.
Investment income also grew 28% to 79 crores. But interestingly, treasury income from clearing and settlement actually decreased, down 27% to 45 crores.
Why would that be down when volumes are up?
Well, that often reflects things like shifts in short-term interest rates, or maybe the amount or type of funds they hold for settlement purposes. It shows how even exchange operations are kind of tied into broader market liquidity conditions.
Got it. So transaction charges, especially derivatives, clearly the star here. Let's dig into that equity derivative segment because it seems like it really shone. What's driving that growth, especially with the Sensex products, and who's trading?
It improves premium realization significantly because the premium you capture on a non-expiry day is sort of higher quality. It hasn't decayed as much. That theta effect.
The time decay of options.
Exactly. Theta accelerates near expiry. So by encouraging trades earlier in the cycle, they capture more value before it erodes. It's quite clever, actually.
Makes sense. And who are the main players in this? HFTs? Retail?
It's a mix. High-frequency traders, the HFTs, they account for around 35%.
Retail investors are pretty active too, maybe 25, 26%. And the rest is prop traders, other institutional players.
Okay. And are they trying to push longer-term contracts too?
They are. There's definitely...
Seriously. 1,052 crores, which is up a solid 30% year-on-year.
30% growth. Consistent.
Very. And the number of transactions processed, 18.3 crores in the quarter, also up 30%.
Incredible volume.
Yeah, the average monthly transactions jumped to 6.1 crores from 4.7 crore last year, and they even hit a new single-month high in July, 6.65 crore transactions. It just keeps growing. It's a real powerhouse for them.
Shows that retail shift into mutual funds is still very strong. Okay, so beyond trading in funds, BSE is obviously proficient with capital raising. How did that side of the business
Look, especially with the IPO market seeming quite active.
Well, the IPO market was definitely vibrant. In Q1, BSE saw 21 new equity listings. That's across the main board and the SME.
Commercial paper, MSBSE helped issuers raise something like 7.159 lakh crores.
7 lakh crores. Just highlights their central role in capital formation, doesn't it?
Absolutely pivotal.
And what about the SME platform specifically? That's been a focus for a while. Still gaining momentum.
It really is. They crossed a major landmark, 600 SME listings.
600! That's fantastic for smaller companies.
And July was actually a record month for that platform, too. 18 new SME listings, raising 880 crores. Since they started it back in 2012, the total capital raise is now over 10,000 crores. 10,652 crores to be exact.
Okay.
And here's a telling stat. The last 100 SMEs that listed, they raised over 4,000 crores. That's like 38% of the total ever raised on the platform.
So the deal sizes are getting bigger. More confidence.
Exactly. It points to significantly increasing investor confidence and, crucially, better liquidity in that SME segment. It's maturing well.
Okay, so clearly revenue is booming across these high volume areas and capital raising. But how is BSE doing on the cost side? Are they managing expenses well to turn that revenue into profit?
Right, let's look at costs. Total operating expenses did increase, but only by 5% to 359 crores.
Only 5% increase with that kind of revenue growth seems pretty good.
It does, but here's the key thing to understand. Almost half of those operating expenses, 48%, are things like regulatory fees and clearing and settlement expenses.
Things directly tied to volume.
Precisely. They're directly correlated to the increasing derivatives volumes. So as transaction volumes shoot up, those specific
Costs will naturally rise too. It's, a cost of doing more business in that regulated space.
That makes perfect sense. But hang on, I thought the notes mentioned clearing and settlement expenses actually declined.
Efficiency.
It's down to two main things, really. First, a change in the contract size. They made the contract sizes bigger. So even if volumes are up, a bigger contract size means you process a higher notional value, potentially, with less cost per unit, or fewer contracts overall for the same value.
Okay, efficiency through structure.
Right. And the second reason, probably more significant, ties back to what we discussed earlier, that shift in volumes from expiry day to non-expiry days.
Because the premium realization is better?
Exactly. On expiry days, that premium is lower because of the theta decay. By shifting volumes to non-expiry days, they get better revenue capture, better premium realization. But the clearing cost is often based on the number of contracts, not necessarily the premium value.
Ah, I see. So revenue per contract goes up, but the cost per contract doesn't necessarily increase proportionally, especially if fewer larger contracts are used.
You've got it. It's an operational efficiency gain. They're essentially processing more value more efficiently by optimizing when the trades happen and the structure of the contracts. Boosts revenue and manages costs simultaneously.
That's a smart operational shift. Okay, what about other costs like administrative expenses? Anything unusual there?
Well, admin expenses were lower this quarter compared to Q4 FY25, but management clarified that was because Q4 had some one-off expenditure. They said the current Q1 levels are now reasonably normalized. So no major surprises there going forward, it seems.
Okay. Understanding costs is key, but so is risk management, especially with higher volumes. Let's talk about the Core Settlement Guarantee Fund, the SGF. What's its status? Is it healthy?
Right. The core SGF It stood at 44 crores as of the end of July. Importantly, there was no additional contribution needed during this quarter.
So 44 crores, is that considered adequate given the volumes? What is the stability signal?
Well, the SGF is that crucial safety net, right? It guarantees trades if a member defaults. The fact that it's stable and didn't require topping up, even with the surge in trading activity, signals that BSE's risk management framework and clearing processes are seen as robust.
So they're confident in their existing buffers.
It suggests confidence, yeah. Reflects a healthy position for the exchange and its clearing corporation. It's a reassuring sign for everyone participating in the market.
Definitely reassuring. Okay, let's shift gears to some strategic initiatives. A big one implemented recently was the Common Contract Note, or CCN. What exactly is that and what's the impact?
Yeah, the CCN was a pretty major market reform. It rolled out across India from June 27th this year. Essentially, it means institutional investors get one single contract note, even if their order gets executed across multiple exchanges.
Ah, simplifies things for them considerably.
Exactly. Creates a level playing field, makes trading more hassle-free across different venues. BSE was also pushing for smart order routing, or SOR.
Which automatically finds the best price across exchanges.
Right. The idea is that SOR reduces the cost of your own large order moving the market price and improves the final execution price for investors. Both CCN and SOR are about making the market more efficient and user-friendly.
Sounds like good plumbing work for the market. Now, on the index side, there was a rebranding. Asia Index Private Limited became BSE Index Services Private Limited, or BISPL. What's behind that and how's it doing?
The rebranding was really about leveraging the strength of the BSE brand itself, the deep trust, faith, and respect it commands. It's now a wholly owned subsidiary.
And its business.
It's doing really well. They manage a portfolio of over 170 indexes, broad market, sectoral, thematic, strategic, equity, fixed income, the whole range. They serve over 300 major clients globally and domestically.
So quite established already.
Oh, yeah. And growing. They launched 7 new indexes already this financial year, including 4-factor indexes. That's on top of 20 last year. And since BSE took full ownership, revenue from the core index operations is up 80%.
80% growth post-takeover. That's impressive.
It is. And they even won an award Index Provider of the Year 2025 from Futures and Options World. So that subsidiary is definitely pulling its weight.
Clearly. What about the clearing side? The Indian Clearing Corporation Limited, ICCL. Another wholly owned subsidiary, right?
Correct. ICCL is absolutely vital. It handles all the critical back-end stuff, collateral management, risk management, and the actual clearing and settlement of all trades on BSE.
And its market position.
Dominant, especially in the mutual fund segment we talked about. They have about a 90% market share there. Plus, it carries top ratings AAA from India Ratings and Care, and has key ISO certifications for resilience and security. And they've handled peaks of 37 crore trades. The scale is immense.
47 crore trades handled. Wow. Okay, BSE also has a presence out in Gift City, the International Financial Center. What's the latest with the India International Exchange, India INX, and its global access arm?
Right, India INX in Gift City. The board recently approved putting more money in, up to 55 crore. This shows its ongoing strategic importance as, India's gateway for international financial services and competition.
What does it offer?
A diverse range of products for global players. And its subsidiary, India INX Global Access, is quite interesting. It allows investments in over 30,000 stocks across 33 countries, plus over 80 global portfolios.
30,000 global stocks accessible from Gift City.
Yeah, so connecting India to global markets and vice versa. And importantly, the Sensex futures and options contracts have been trading on India INX since February this year, extending the reach of BSE's main derivative product internationally.
Okay, let's talk physical infrastructure. Colocation where traders put their servers right next to the exchange's matching engine for speed. Sounds like demand is high.
Very high. All their current racks, 300.
By the end of the financial year.
And how much does that contribute? Is it a significant revenue line?
Well, pricing is around even 12 lakh a year for a standard 6 kVA rack and 25 lakh for the high-power 15 kVA ones, which are maybe 10% of the total. Based on that, rough estimates put the Q1 revenue from Colo at around 12 crores. So, yeah, it's a valuable growing stream for them.
12 crores a quarter just from rack space.
Yeah.
Okay. And they also introduced throttle charges recently. What's that about?
Yeah, throttle charges came in last October. It was initially for members sending more than 10,000 messages per second to the exchange. They revised the limits from June 30th this year.
How does it work now?
Now you get 40 messages per second, MPS free. If you need more, say 100 MPS, it starts at 50,000 a year, and the cost goes up proportionally from there.
So managing system load and maybe generating some revenue?
Both, I think. Yeah. BSE argues their charges are lower than competitors, so it's still about cost-effective access. But yeah, it also helps manage system capacity and diversifies revenue a bit.
Makes sense. Okay, one more operational change, the equity derivatives expiry day. It moved from Tuesday to Thursday. Why the change, and what do they expect?
Right, that was an interesting move. They actually started with Friday expiry way back and shifted to Tuesday.
And now Thursday. Why?
They said it was based on feedback from market participants and also the realization that Thursday has, traditionally been the expiry day for the most successful contract of this country, likely referring to the Nifty options.
Aligning with the market leader's expiry day.
Seems like it. Management said they don't expect a negative impact on premiums because of the shift, but they did add the caveat, time will tell.
Oh.
It's a strategic move to potentially capture more flow by aligning with established market habits.
Okay, interesting. Let's maybe zoom out a bit now. How does all this fit into the broader market context? How's the Indian economy holding up amidst everything going on globally?
Well, the Indian economy has shown pretty remarkable resilience, despite global headwinds like trade tariffs, conflicts, and general volatility.
What are the underlying strengths?
Things like strong corporate balance sheets, a period of political and policy stability, the well-known demographic dividend, and just the sheer pace of digitalization happening everywhere. Plus, high-frequency indicators, looking at services and manufacturing, they continue to signal pretty broad-based growth. So the backdrop is generally positive.
That's good to hear. What about inflation and interest rates? Any relief there?
There's some encouraging signs, yeah. Inflation has been easing. The monsoon looks favorable, which is always crucial. And the RBI has held the repo rate at 5.5% recently.
After cutting rates before.
Right. That hold came after 3 consecutive cuts that totaled 100 basis points, a full percentage point. So stable rates now, combined with easing inflation and a good monsoon, could definitely help support economic growth.
And investor behavior in this environment, are foreign and domestic investors seeing eye to eye?
Definitely not eye to eye right now. We saw foreign institutional investors, FIIs, pull out quite a bit in July, sold off nearly 48,000 crores.
Wow, significant outflow.
But here's the counterpoint. Domestic institutional investors, DIIs, stepped right in. They injected 61,000 crores in July, more than cushioning that FII outflow.
So domestic money is holding the fort.
Absolutely. DIIs have actually been net buyers every single month so far in 2025. They've pumped in over 4 lakh crores this year. That, plus the steady flow into systematic investment plans, SIPs, mutual fund SIPs, hit a record 1.4 lakh crores during the quarter. It just shows tremendous underlying confidence from domestic investors.
That domestic flow is really becoming a structural feature of the market, isn't it?
It really is, a critical stabilizing force.
Okay, and what about the regulatory environment, particularly for derivatives? Is it stable, or are big changes potentially coming?
Management described it as a consultative, co-created process. Regulations are always evolving, they said. It's a continuous process, especially in a dynamic area like derivatives.
So constant tweaking rather than big bangs.
That seems to be the sense. Evolving could mean anything from new product rules, risk management updates, market access changes, always trying to balance growth and investor safety. As of early August, they said no new major consultative process had started.
Suggesting some stability for now.
Perhaps. They also mentioned WDD 2.0 that's related to new rules on open positions and derivatives that come in July, but it is too early to really comment on its impact yet. There's more time to play out.
Got it.
So looking ahead then, what's BSE's main strategic focus? What are the encouraging signs for the future beyond just this quarter?
The focus seems consistently on being customer-centric.
Makes sense. And finally, a really important role for any exchange is investor protection and education. What are they doing on that front, especially with all the digital scams we hear about?
Yeah, that's crucial. Their investor protection fund, the IPF, ran 26 investor awareness programs just in Q1, educating people.
That's quite active.
And they've joined SEBI's big SE versus scam campaign, actively working to fight financial fraud, which is so important now. Plus, they launched a mobile app called Nivesh Mitra.
What does that do? Investment advice?
Yeah, strictly educational, no advice. It helps people learn about opening accounts, understanding risk, even simulating investments safely. It's all about empowering investors with knowledge.
A proactive approach to literacy. Good. Okay, let's briefly touch on shareholder value metrics before we wrap up. How has BSE's net worth evolved, especially considering the bonus share issue?
Right, the consolidated net worth hit about $49,617 million in Q1 FY26. That's a solid jump from around $35,665 million same time last year. Standalone net worth was $42,152 million.
And the bonus issue.
Yeah, they did a 2.1 bonus share allotment back in May 2025. That increased the paid-up equity share capital, and importantly, they've adjusted the earnings per share calculations for all periods shown to reflect that, so the comparisons are like for like.
Okay. And historically, how have they been with dividends and buybacks? Anything this quarter?
They do have a history of returning value to shareholders, using both dividends and buyback programs over the years. Shows a commitment there. But for this specific quarter, Q1, no dividend was declared.
And the shareholder base itself, is it concentrated or diverse?
It's pretty diverse, actually. You've got the public, trading members, institutional investors like QIBs and FPIs, corporate bodies, mutual funds, AIFs. A real mix. For instance, LIC holds a significant stake, about 5.6%, so broad participation.
Okay, this has been incredibly thorough. A real deep dive into BSE's Q1 results. The narrative seems clear. Really strong growth, solid strategic execution, and underlying resilience.
Yeah, from those record revenues, particularly in derivatives and mutual funds, to the buzzing IPO market, and those key infrastructure moves like the common contract note, they're definitely active.
Enhancing the market structure, boosting participation.
Exactly. And if you step back and connect this to the bigger picture, BSE has this incredible century and a half of history, right?
India's oldest exchange.
But you combine that history with this recent phase of rapid evolution, the focus on tech, on innovation, on investor education. It really positions BSE as more than just a place to trade stocks.
More like a foundational piece.
I think so. A crucial pillar, maybe, in India's big ambition for Viksit Bharat by 2047 becoming a developed economy. Which kind of leaves us with a final thought for you, the listener.
Yeah.
What role do you think this kind of ongoing financial market innovation, the technology, the new products, the infrastructure upgrades we've discussed, what role does it really play in achieving that national development goal? And maybe how can you, as someone interested in this, keep tracking these systemic shifts that are fundamentally shaping India's economic future? Something to think